You ask a bank for a $10,000 loan. They say yes. Quick question. Where did that 10 grand come from? If you said someone else's savings, you just failed the most basic test of how money actually works. Because the bank didn't have your loan sitting in a vault. It created it, out of nothing, by typing. Here's what really happens. The second your loan is approved, two things appear on the bank's books at the exact same moment. On one side, a loan. That's you owing them 10 grand. On the other side, a deposit. 10 grand sitting in your account ready to spend. The bank didn't move money from a saver to you. It made a brand new deposit appear. And a deposit is money. Before you walked in, that $10,000 didn't exist anywhere on earth. Now it does. The total money supply just grew by $10,000. And before you say that can't be legal, this isn't a loophole. It's the system working exactly as designed. The Bank of England spelled it out in a famous 2014 paper. Most money is created by ordinary banks making loans.
In fact, roughly 97% of all the money in the economy isn't printed cash at all. It's just numbers in bank accounts, created by lending. Okay, so lending creates money. Now, here's the part nobody tells you. Repaying a loan destroys it. Watch the books again. As you pay back the principal, your deposit shrinks and the loan shrinks together until both hit zero. That money doesn't go into a vault. It doesn't get handed to a saver. It's just gone, uncreated. The money supply quietly shrinks back down. So money is constantly being breathed into existence when we borrow and breathed out when we repay. The economy's money supply isn't a fixed pile of coins. It's more like a balloon, inflating and deflating with every loan and every repayment. But hold on. You borrowed $10,000 of freshly created money. You don't pay back 10 grand. You pay back 10 grand plus interest. So what happens to the interest? This is the clever bit. The principal gets destroyed. The interest does not. It survives as the bank's profit. That's how the bank actually makes money. It conjures the loan from nothing and keeps the interest as very real income. Now, this sends people down a rabbit hole. If only the principal got created, but we owe principal and interest, isn't it impossible to ever pay it all back? Not quite. When the bank spends that interest on staff, buildings, shareholders, the money flows right back out into the economy for the next person to earn. The system keeps circulating, but it does mean one quiet thing. For the money supply to keep growing, somebody, somewhere, has to keep borrowing. Which raises the obvious question. If banks can just type money into existence, why isn't every banker a trillionaire? Because creating money is not the same as creating wealth. Banks are boxed in on every side. They can only
lend to people who'll actually pay them back. They have to hold capital and reserves set by regulators. They have to settle up when that money leaves for another bank. And they're competing with every other bank doing the exact same thing. The money tap is real, but the regulator's hand is on the valve. So here's the mind bender to walk away with. Money isn't gold in a vault. In a modern economy, money is mostly debt. It's created by a promise to repay and destroyed the moment that promise is kept. Which means the amount of money in your world is rising and falling every single day based on how much everyone is borrowing versus paying back. When borrowing booms, money floods in and the economy heats up. When everyone pays down debt at once, money quietly vanishes. And that's a big part of what a recession actually feels like. Money that's born from a promise and dies on repayment. Kind of changes how you look at your mortgage, doesn't it? If this rewired your brain a little, good. That's the whole point of this channel. Subscribe to Curio and stay curious.